Welcome back to Lomiko Metals channel, everybody. We have an exciting news releases. We're going to dive into the preliminary economic assessment today with Paul. We're going to have a little screen share action going on so you guys can follow along and see what's happening. First off, Paul, how are you doing?
Absolutely fantastic. We finally got to this point, and it's really exciting news for Lomiko, real big development in the company. I'm glad to be able to share it with people who are watching this.
Wonderful. Well, let's break it down for everybody and bring it up so we can give people a good visual aid here.
Yeah, for sure. I'm going to share the PowerPoint and then talk through it a little bit so people really can tie it in. Okay, guys, here we go. Here's where we are, and we're going to talk through a number of very, very important numbers that have come up during the PEA. First of all, as you know, the location of the project is very close to Montreal, makes a big difference because the Port of Montreal is an international port, and we can get to the east coast of the United States and to Europe very easily. And those are the two jurisdictions that are very important because they're both jurisdictions in which critical minerals agreements and collaboration efforts are going on between Canada and EU and Canada, US. So very important location, location, location. So where are we at? The little corner there is Montreal, and then this is the location of the property, not very far up, about 192 kilometers by highway to the property. Very, very important. So what's happened here? As you know, we've had a long history of drilling this particular project, getting it up to snuff, and then also we were really intrigued by the near surface mineralization. So what we've done now is hired Osenko to do a complete preliminary economic assessment to see if there's a reason to go forward to feasibility and to construction of the project. So what they came back with was very, very good numbers. Now, I'm only talking about the post-tax NPV. Now, remember that there is no such thing as pre-tax. Pre-tax is, it's like impossible to have. Whatever counts is post-tax, meaning that what is the value of the project after all the taxes have been paid and all the construction of the project have been removed. So what's your profit going to be? And what we have is a really sterling number. And this, remember, this is only 8% of the total number over the 14 or 15-year mine life. So the net present value, the value today of this project in its in situ form without construction or anything like that is $186 million Canadian, 150 American approximately. Now, what that represents is to a bank is if we were to go to a bank or to a merchant bank or a person that or a group that is interested in funding the project, we would be able to present to them a project that they would get 21% return or more from their investment over the long term. And a lot of these institutions are looking long term. Key part of that is the payback of the project, meaning how long will it take to get to that point in time in which the project will be paid for, and it's 4.2 years. Very, very reasonable time frame. And in a 14-year or 15-year mine life, that's at the minimum. Right now, it could potentially be more. That really depends on a little bit more work and a little bit more discovery of some more areas. Because remember, we've only drilled into 2 of 12 zones that have mineralization. As I mentioned before, CapEx indicates how much it will cost to build the project itself. So 236 million is the cost to build a project and to get it up and running. Remember that there's probably about 20% of that is sort of a contingency fund as well. So that may be used or may not be used depending on how things go. All in sustaining costs, important number, meaning that, okay, what does it take to keep this mine up and running? And $400 per ton is the all-in sustaining cost over the life of the mine. And what we've planned, and this is vitally important for you guys to understand, is there's other groups out there that have predicted higher prices of graphite. They've used 1,700, 1,200. Some have even used 3,000. And, they've lost credibility for doing that because you can't see that far ahead to see these huge numbers or price spikes. No one can predict a price spike in any market. Would be beneficial if there was one? Yes, of course there would be a lot of benefit for Lomiko, but if the price didn't change and stayed stable for the next 15 years, what would that price be? Well, our price is $916 per ton US. And with a all-in sustaining cost of $400 per ton US, we have a good margin there. That's important for any project. So what we do is we can benefit from any price spike. If it goes to $1,700 per ton or more, like some of the other groups, such as Nouveau Monde, have predicted, we are getting very, very good on our internal rate of return because it is a project that has, I think, a very low sustaining cost of removing the graphite. So I think that's where we're at. We have 100% of the project, as you know, and we have a 1.5% NSR, which can be reduced to 1% with a $500,000 payment. And obviously, we're going to look at buying out that 1% as well, so that we have no overhead on the project. So here's the next slide, which is really vitally important for everyone to take a look at. So what we see here is that the area here that produces the first zone, which is called the EV North, Electric Vehicle North, that zone is a very nice, bright area of mineralization that we find would be the core of the mine. That's where the mine would start, in and around that area. We'd have our first pit there. And as we're moving forward and removing material, we'd move it down to this particular area where this is the processing facility. And then the material that we don't actually truck down there that's waste goes into this big area here, which is a co-disposal facility. So we put material, rocky material that won't have any processing to it in there, and we're also going to put post-processing material in there as well. That'll create it's a nice easy slope. It's already been logged, so there's no environmental fallout from clearing that area. And in addition to that, it has a nice easy grade, so it's not going to give way or have any problems. There's not a lot of water on that side. There's a ridge running right through here. Very important because basically none of the water runoff from this will go into any of the lake or river systems in on this side. And as you can see, there's not a lot of lake situations on this side, so we're going to be pretty well. But here we're going to start here, EV Zone North. As we go forward, we're going to backfill also into the EV North as we move down. EV South will then start, and then Graphene Battery Zone will be later on in the project life, probably going to about year 7 or 8 before we even start down there. And the reason for that is it's just lower grade. It's good material, but it's just a little bit lower grade. We want to have a short return on our CapEx. And so I think this is a viable project that we've got here. So it's really interesting times for us, and I'd love to see how market responds.
Yeah, I mean, Paul, you laid this out pretty well. I mean, obviously the numbers look great. Everything's looking really good for going forward. If anyone is wondering about any of this, any of the terminology or anything, don't be afraid to ask us. We'll happily dive into it a little bit deeper. Is there anything else, Paul, that you really want people to see here?
Yeah, the vitally interesting part of this, Michael, is that if you look through that news release, and I've only talked really only about the highlights, but it is a 16-page release that identifies all of the nuts and bolts of it. So there's sensitivity in regards to the US Canada dollar. Now, if the Canadian dollar appreciates against the US dollar, this project's value goes up.
Yes.
Secondly, in addition to that, there is also sensitivity to the price of graphite. Price of graphite goes up, the value of this project goes up. So
Yes.
it's a really interesting situation, and we may see a really big valuation change still on the pre-feasibility and feasibility stage of this project. So it's exciting times. I think we had a lot of volume on the one day we traded last week, which was Friday, and after the news release came out, and interesting to see what the next couple of weeks brings.
Agreed, agreed. It's exciting to see, and I'm glad people are getting some eyes on it. And I do highly recommend, and we will leave a link below to the news release so you guys can dive through it. And again, any questions on that as well, let us know. We'll be able to go on that in detail. But if we were to go through the whole thing right now, it'd probably be like a 40-minute long interview, so we won't make you all suffer through that. But all right, Paul,
Yeah.
thank you so much for coming on. Anything else before we go?
Yeah, there'll be analysts that we've been in contact with, which will produce new targets on this. So watch out for that. Share this with friends, family, people you like. I'm telling you, this is going to be an important project. We have Nouveau Monde that's trading at $7 US on the New York Stock Exchange. Westwater Resources trading at 383 on the NASDAQ. We're at 11 cents in the US and 14 cents in Canada. I think we have a big valuation coming at 25 to 30 million market cap. And this project alone bringing in 186 Canadian or 150 million valuation. I think we have a lot of attention coming to us. So stay tuned, and we'll see how things go.
Wonderful, Paul. I couldn't have said it better myself. Everybody stay tuned for more news coming over the wire as soon as it comes in. But for now, everybody, thank you for watching.
Have a good one.